The Pantnagar plant of the company won the first position in the Supplier Quality Award organized by Tata Motors and Platinum Award in the National Kaizen competition under the Innovative category organized by CII. And the Bangalore plant of the company has won the Gold Award in QCC competition organized by the Q2FY22 Chapter. The concept of capacity planning and inventory management has taken a dynamic shift post-COVID-19 because of the high levels of volatility. We are expecting our order book to improve at a solid pace with our new product launches by the OEMs. Now, I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the financial performance of the company.
Good afternoon, everyone. Let me brief on the operation and the financial performance for the Q2 and H1 of financial year 22. Operational highlights: the share of LED lighting stands at 34% to total revenue, and of conventional lighting stands at 66% for H1 FY22. With respect to product mix for H1 FY22, as a percentage of total revenue, 64% revenue is from the front lighting, 26% from rear lighting, and 10% from others. With respect to segment mix for the H1 FY22 as a percentage of revenue, 64% from passenger vehicles, 29% from two-wheelers, and 7% from commercial vehicles. With respect to financial performance at consolidated level, the revenue stood at rupees 453 crore for Q2 as against 397 for Q2 FY21, up by 14% as against industry degrowth of 3%. On half-yearly basis, the revenue stood at rupees 767 crore for H1 this year as against 475 crores for H1 last year. Excluding mold sales, the revenue for Q2 is rupees 438 crore as compared to 376 crores in Q2 last year. On half-year basis, same stood at 470 crores as compared to 450 crores in H1 FY21. The company reported consolidated Ebitda of rupees 41 crore in Q2 FY22, which is same as was in Q2 FY21. The Ebitda margin for Q2 is down by 130 basis points from Q2 last year, primarily on account of a steep increase in raw material prices, the compensation of which is under discussion with customers. Profit after tax and sale of associate is rupees 15 crores in Q2 versus 7.2 crores in Q2 last year. On half-yearly basis, the same stood at rupees 5 crore as compared to loss of 24 crores in H1 FY21. The capex incurred during the half-year was rupees 14 crore. For the full year, the same will be around 170 crore on account of capitalization of new electronic facility and Sanat plant expansion. This is all from my side. We will now open the call for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is just from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, so firstly on this PSA order, this is for a passenger vehicle model in India or overseas?
This is for the passenger vehicle model.
In India or overseas?
This is basically for the overseas model. You're basically going to be doing a little bit, but they'll be manufacturing it in India.
Okay. This will be EV basically.
Yeah.
And you mean to say supply will start in FY24?
That's correct.
And what could be the size of this order, like say at peak potential?
Well, I mean, so currently they are talking about a volume of about 18,000 annually.
18,000 annually volume, okay. Sure. Secondly, on this revenue from others in the presentation, I think that has seen quite a good ramp up versus last year. And then Q4 also was very high. So which customers are contributing higher to this others revenue?
So others, the TVS is almost around 14 crores.
Sorry, which one?
TVS, others is 14 crores. We have put the others as 104 crores. If I distribute that, it includes the TVS of 14 crores around.
Okay.
Then LED of around 26 crores, JD of 10 crores, MG Motors is 3 crores, Toyota is 5 crores, and Nissan 5 crores, and remaining others is the 41 crores. The bifurcation of 104 crores in the...
Which one is said is the 26 crore? 26 crores.
Lumax Autotech.
That's Autotech, okay.
Yes.
This is mainly off the market, right?
Yes.
Okay. And in the recent model launch, like the XUV700, we have any presence in M&M?
On XUV 700?
Yeah.
So we are basically present not on the lighting solutions on that.
Lighting, we are not there. And lastly, in terms of RM pass-through, there's some bit of gross margin pressure that we're seeing. So, will the pass-through happen in Q3, Q4, or how should we look at it? The gross margin going ahead.
So absolutely, there is a lag of about 1 to 2 quarters. So that basically should come in terms of the raw material. And we have basically already taken in terms of almost close to around about 2% or so, where we have actually requested for the customer price increases.
2%, okay, the price increase, okay. But is there any further increase in RM prices in Q3 as well versus Q2?
The RM prices still continue, and there are a few RM prices still continue to escalate, and I think that we will again be taking compensations with Q3, Q4. We're still seeing a very inflationary trend in RM prices.
Okay, thanks. And lastly, on the capex side, what would be final number for this year and plan for next year?
The capex this year is expected around 170 crore, largely of that Anand expansion project and the electronics of that PCB division.
You're talking about this year?
This year, yes. It is capitalized in this year.
Next year, sir?
Next is around 100 to 150 crores, but that all depends on how the industry grows.
Okay, thank you. I'll join back with you.
Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah, good afternoon, gentlemen, and wish you all a happy new year too. Deepakji, my question was more regarding the broad-based industry outlook, what you feel. How do you see the passenger vehicle and two-wheeler panning ahead, and when do you see these chip issues get resolved? We would like to have your view on that, sir.
Thank you, Debai, and Happy New Year to you as well. I just wanted to basically say that I think we continue to be challenged by semiconductor shortages as a supply chain globally. As far as our estimate is concerned, I think the next few quarters would actually have that kind of challenge, but that is the new normal. I think our customers will adjust the production schedule. Some of our main customers have seen the ease of basically semiconductors already coming in, and their ramp up has started in the month of October, even November, primarily because of a particular region, COVID cases being eased out, and they're basically semiconductor supplies starting better from that region. So there is a capacity issue accentuated by COVID issues. If I were to give you an outlook, so the industry, I think the two-wheeler will continue to have a muted demand. We are seeing that in one of the major customers of ours. And also, I'm talking about mostly this financial year as such, and also the passenger car would also have a muted demand, but that would be not because of demand, but that primarily is because of the supply chain disruptions. So we see that, so the next 2 quarters also would actually have certain demand issues and supply chain constraints.
Got sir. So my second question was regarding, can you get us some understanding about the future prospects of this new generation, what you call it, AFS and ADB prospects? What do you see that what change comes in and what opportunity lies to us on that side?
So I think in terms of the lighting technology, the lighting technology continue to basically evolve. I think from the LEDs, which is already having a good acceptability in the market, there are specifically on the four-wheeler segment where the four-wheeler, if you see, SUVs are taking a lot more attraction and traction than the lower segment vehicles. And on the SUVs, I think these new technology of lighting, be it AFS, be it ADB, be it projector systems, that basically will play an important role. We already are in discussions with most of our customers. As you know, lighting is a long lead time and advanced lead time item. So specifically on fast cars, we are talking about 2 to 3 years hence, you will see all these technologies coming in. Challenge would be that it will be a mix of import as well as then localized technologies. The electronic facility what we have put in, which is basically for the localization SMT, that would help us in also further localizing these technologies.
Great, sir. Thank you, sir. I'll come back in queue for more questions if any. Thank you.
Thank you very much.
Thank you. The next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, congratulations for good set of numbers. So these new technologies which you talked about, does Stanley have them?
Yes, absolutely. Hasmukh, Stanley has that. We are also in discussions with them for basically adapting these technologies for the Indian affordability price. So Stanley is definitely a player on that. We've also mentioned that we have opened a new office in Czech with basically a team which is basically, again, Lumax Industries invested in the Czech design office capabilities. And this is primarily also to substantiate engineering localized development within Lumax for these new technologies which are coming in.
Okay. Yes, sir. So the current year we said that our capex will be about 170 crores. Can you give a breakup as to how much you will be spending on the electronic facility?
Electronic facilities around 80 to 85 crore, and that of others are the Saran facility and the normal capex.
Okay.
I'm talking about capitalization.
Yeah, capitalization. And next year we will have about 100 to 150 crore.
Yes, depending on the industry cycle and all.
I think we have been very prudent in terms of our capacity investments. So fundamentally, in terms of the investments which we had to do in the expansion, primarily on Sanand as well as in the electronics, that's already been done. What you'll see is now the capitalization. I think in terms of cash flow, I think we probably would be more attuned to a lesser capacity expansion, given basically the variability. So we don't see looking into the order book and the capacities we have to have any very strong expansions in that. We want to first optimize our current capacity utilizations.
Right. Also, looking to the current scenario and the supply chain issues faced by most of our OEM, do you think that in H2 we can more or less replicate what we have done in H1 or slightly better? Do you think that possibility is there in terms of at least top line?
I think you have to understand that, Q1 was actually COVID 2.0 impacted. So if you look at H1 per se, I'm definitely sure that H2 will be much better than H1. That is for sure. I think there will be a high double-digit growth if I just compare it with H1. And I think we also would expect that there should be some ease because supply chain disruptions do also play on efficiencies and other cost pressures. I think that would ease out because we are seeing a better supply chain kind of adjustment given the current shortages we have.
Okay. So in terms of our Ebitda margin without other income, do you think if we can have a double digit of about say 10% or will it be below that level?
No, I think if you see historically, we have had 7, then we were at 8.1, now we are basically at about 9%. I think we would basically endeavor to basically be at this similar level, which basically you have seen in Q2 and such.
Okay, around 9% level. So that even for full year also we can sustain that level.
We would like to sustain that, yes.
Yeah. And the last question from my side, how much is the gross debt? Because we had about 425 crores as on 30th September. So have we fully drawn everything you wanted for the capex, or there will be some more borrowing will be there?
No, we have taken 80 crores for the expansion project as a long-term loan.
Mm-hmm.
And if I add the working capital of around 300 crores, the total debt is around 388 or 390 crores as on 30th September.
And then there are some leased assets also.
Pardon?
Leased assets taken on lease. I was adding that also.
No, I'm talking about the debt which I've taken from the bank or the financial institution, which come as a debt in my book. That is normal entry of that asset on lease, etc.
Yeah, so that is 380 crore. By end of the year, do you think it will be similar or will it be more than that?
I think we'll be able to maintain at this level or rather improve it.
Okay. That's quite redeeming. Okay, sir. Thank you very much. All the best. I will join in the queue.
Thank you.
Thank you. The next question is from the line of Bhaskar Chaudhary from Entrust. Please go ahead.
Yeah. Hi. Mr. Ben, just one question. When do you anticipate that you'll hit your earlier peak revenue, which is about 1850 crores? Do you anticipate hitting it again in FY23, or do you think it will shift to FY24?
So let me understand the question. You're saying that when do we anticipate the peak revenue which we did in 2018-19? When and which fiscal year we would hit that? Is that the question?
Yes, that's the question. Yes.
Yeah. So I think, again, it's a tough question because, given the visibility and different kind of disruptions, but we would like to hit it basically in the next financial year. I think if you look at our just one quarter performance multiplied by 4 times, so if you see that basically would give you closer to the peak revenue which we hit in 18-19. Of course, there is, quarter-on-quarter disruption. I think next year should be a much more robust year, inching closer towards the 18-19 revenues.
Okay, and in terms of the composition of LED lighting is very conventional. So obviously the events of the last couple of years have kind of impacted that journey. But when do you see, earlier a few years ago, I recall there were talks about you moving to that 50% number. So internally and in your long range planning, or when you have discussions at the board level, when do you see that number actually kind of converging to 45-60%? Over the next how many years?
Obviously, we have been doing at a 60-40 level. Today it's about 35-65 level. I think our outlook remains that we want a 50-50. I think I've mentioned in the previous calls that the new developments, what we are doing, it is some element in lighting, both on tail and head, is basically LEDs. We expect that next 2 years, we should basically hit that 50-50 level. Also, you have to see that very closely that in the market, the bottom of the pyramid and the two-wheeler sales have actually gone impacted in terms of demand. And I think the customer may basically look at introducing new technologies to entice more customers, lighting being one of them, is basically coming in. So I think we are pretty hopeful that irrespective of how the market demands change the LED attrition and LED adoption will continue to increase.
Okay, understood. And one last question is, when do you see operating leverage start to play out? Because the earlier participant also asked you that question, but in terms of margins, when do you actually see double-digit margins in the business and sustaining? So again, from your long-range planning, how are you viewing the margin trajectory for the next 3-4 years? If I would ask, short term, there are obviously uncertainties, but on a long-term basis, how do you view that journey?
So this is Anmol Jain, so I'll take that on the margin front. I think if you look at the margin currently, even in Q2, broadly we're operating at a double digit had it not been for the raw material price correction because we're still awaiting certain price amendments from our OEMs, which would come in the subsequent quarters. So if I look at Q2 standalone, clearly we're still operating at a double-digit margin. Going forward, I think the next, let's say in H2, we should definitely fare much better compared to H1, purely because of the volume traction as well as certain raw material price gains, which we anticipate to get from the customers. And going into the next year, I would say that definitely we should be expanding our margins further when the top line growth also expands. And given let's say more 2 to 3 year horizon, I think I have always maintained that our endeavor is to inch closer to a teenage Ebitda, like a 13% Ebitda or so, but it would entail at least a few years until we get there. But I think clearly the roadmap is clear, and I hope that going forward, quarters and years ahead, we only kind of follow that same path in line with our 3 to 4 year goals.
Okay. Thank you. That's all from my side. Thanks a lot.
Thank you.
Thank you. A reminder to the participants to ask a question, please press star and 1. The next question is from the line of Ronak Jain from Jain Capital. Please go ahead.
Good afternoon. A couple of questions from my end. The value of LOIs received in HVAC panel, as mentioned in the press release, the SOP is expected in FY24. Are we expecting any other delivery in HVAC prior to that period?
Your line was not clear. Could you just repeat the last sentence? I understood that HVAC panel. Then what did you say on the last point? What was the question?
So, are we expecting any other delivery in HVAC prior to that period?
On HVAC panels, no.
Yeah. Okay. Secondly, what is the value of new launches made during the quarter?
The value of new launches?
Yes.
I think I don't have that figure with me right now. I'll send it out to you.
Sure. That's all from my end. Thank you.
Thank you.
Thank you. The next question is from the line of Raj Joshi from E Securities. Please go ahead.
Hello.
Yes, go ahead, please.
Yes, sir. So can you provide some guidance on the H2 numbers in terms of top line and margin, considering the prevailing semiconductor scenario?
For the full year?
Yes, sir. For the H2, sir.
So if I were to look at Q2 standalone, the company did a 450 odd crore revenue. And I do expect that Q3, Q4, hopefully, we should have a similar trend continuing. Obviously, Q1 was a much lower number because of COVID 2.0. So, if I were to give you a sense, I would expect at least close to around another 850 to 900 crores revenue for H2, assuming that the similar trend continues in terms of the production ramp up. Because as Deepak had mentioned earlier, the semiconductors, most OEMs have started ramping up in Q2 onwards because of the semiconductor shortage. They seem to have their supply chains now covered.
Okay. So my next question is, what are our expansion plans in near future, and what is our long-term lights and other product diversification ratio?
So I think, the company has taken during the Corona period, substantial investments. As rightly said, the investments have been primarily in the expansion of the Sanand facility, which is in Gujarat, and also on the expansion electronic facility. On the near term, we don't see any further expansions because the company is quite poised and has basically made the technology as well as CapEx, OpEx investments. Now we're looking for basically good pull from the customers so that we're able to utilize it. In terms of diversification, although the company is primarily into lighting, we have basically secured ordered for basically HVAC panel, which Stanley also manufactures globally, and that we've already secured an order which will start basically the SOP in FY24.
Mr. Joshi, does this answer your question?
Yes. Thank you.
Thank you. The next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, hi. Thank you for giving me opportunity. Sir, can you just tell us what is happening in SL Lumax?
In SL?
SL Lumax.
Yes. So we can give it, I'll tell some SL to give some share.
SL Lumax financial for Q2 was the sales was around 511 crores with EBITDA margin of 5.2%. And if I accumulate H1 performance, it is around 973 crores of the sales with EBITDA margin of 3.7%.
Okay. And how much? 3 point how much, sir?
EBITDA 3.7%.
3.7% EBITDA. Okay. So, sir, from the business point of view, how do you think Hyundai and Kia both put together will shape up? Because I think that Hyundai has been taking a lot of initiatives going by the ads and the articles which come in the auto magazine, regarding some setting up some sort of a customer-friendly interface and things like that. So how do you see the future for SL?
Yeah, I think, SL is basically our Korean partner and catering to Hyundai and Kia. If I were to merge Hyundai and Kia volume and see how they have performed, so they have definitely been one of the second largest beneficiary in terms of market share gain over the last 2 years. The largest probably being Tata. And I think we continue to enjoy a very, very solid and strong partnership with Hyundai Kia as we are the dedicated source to them for lighting, for trim parts, for even shifters and mirrors. So that's why, so you see there is a strong performance. However, as I've always mentioned, that SL Lumax is a global account with SL for these two products. So there is always basically a standardized profitability given basically the growth. So we are very bullish about it, and the company has also invested for basically Kia Motors on that expansion.
Okay, that's right. So now looking to the customer-wise breakup which you have given, the Maruti Suzuki has gone on record to say that also SUV segment has been overshooting as compared to the lower cars, the small cars, etc. They don't want to vacate that space. So, as the other OEMs are getting more towards the SUV, etc., how do you see our customer composition changing over next few years? Like in this particular quarter, Tata Motors has done so well. So what is your feeling about it?
Yeah, so I think it's a very good question. I think if I just look at it, we are very fortunate that in our top 5 customers, apart from Maruti Suzuki and the two-wheeler players, number 4 and number 5 are Mahindra and Tata Motors.
Correct.
And both players are basically the largest SUV manufacturers. I'm not taking basically Hyundai and Kia because Hyundai and Kia we cater to basically through SL Lumax. So if I look at from a very clear-cut market strategy and market share consolidation, we have basically Maruti, we have Hyundai, we have Kia, we have inroads with Mahindra, and we have inroads with Tata, which are basically the current top 5 players in basically the country. Now, obviously, someone's gain would be someone's loss. Today looks as if the SUV is extremely bullish. And you are right that Maruti Suzuki has made some statements in the media. We continue to engage with all our customers diligently. Maruti still, we believe, will continue to be our number 1 customer just because of the scale of Maruti is almost 2 times or 3x than what basically the other 2, 3, 4 players are. But this trend shifting, we are monitoring primarily. I think it will drive the technology change which is there on the lighting, because SUVs do demand a higher technology, a higher value add on lighting. As you saw, when basically the AB segment started to move towards C segment, that means the entry cars basically of Alto, which we were also 100%, started to move to C segment. You saw that lighting also value went up. We are also very hopeful that lighting value will keep on going up when basically you talk about the SUV. Case in point, I just want to also elaborate MG Motors. Now, MG Motors is a new basically entity for Lumax. It's a new customer. I think we are very, very bullish. I think that also has, in the next 3 years, a potential for Lumax to become its top 5 customers.
That's correct. Okay. Now, for the new lighting technology which you talk about, how much time it will take to technology and start manufacturing lighting, which might be fitted in the SUV and some high-end vehicles? How much time it will take?
So irrespective of whatever type of technology, lighting basically takes at least 2 to 3 years in terms of a development cycle. So we would have some visibility on basically FY, say 24, sitting currently, that what are the product launches is coming in. Now, there could be, let us say, a 6 months plus minus delay some customers have had. We have seen that in recent past, especially more so in the Corona times. When basically customers have delayed their launches, maybe because of chip shortages, maybe because of demand outlook, all that. But I think as a lighting product, it is an early advanced program. It takes 2 to 3 years. So we have a good visibility what kind of product technologies will be coming and entering into the market.
Okay. So in view of this, do you think any major shift in the competitive position of the different players who are there, like ourselves, Minda and others?
No, we continue will be taking the market leadership position. We will continue to do that in the next 3 years or so. And that's what basically our outlook is. Again, I would like to repeat that a lot of the competitions are more specific towards one market segment. There are very few who basically cater to cross all market segment. The new growth opportunities, apart from the pass car, two-wheelers, what we already are currently playing with and have basically the customer connect, is on the farm equipment segment, where basically a lot of new lighting technologies is coming. We see that in that segment also, Lumax will basically in the next 3 years become a clear winner as the market leader on that particular segment. So I think this is where we continue to play out, and of course we do get advantage of Stanley being there as a partner, which basically gives us and provides us the technology.
Correct. So one question from Mr. Mehta. Last time you had said that in current year, our effective tax rate will be around 35%. So do you still hold on to that for FY22?
The effective tax rate was 28.5%. And I think it is around 28 to 30% for the year end also.
Including deferred tax liability?
Yes.
Okay, fine. Thank you, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Nidhi from NK Advisors. Please go ahead.
Hi, thank you for taking my question. I just want to understand that with respect to the integration plans, could you throw some texture on how much advantage we will be able to derive on our margins, and how long will it take us to reap these benefits with respect to margins?
You're talking about the investment plans, ma'am?
The backward integration plans.
So backward integration plan. Yeah. So Anita, I think as Anmol had said that I think our endeavor is to basically go into the double-digit area and further basically solidify it in the next 3 years or so. I think as and when basically more and more localization and adoption of LEDs will start coming in, you will see that basically gains happening. Also, we see that the supply disruptions are easing out, and hopefully we would be able to then scale up our revenues faster with new product launches. So we are definitely bullish about basically having a better margin improvement, given that said the supply chain disruptions ease out.
Thank you. This really helps. Also, are we facing any difficulty in marketing our LED products with overall a price rise scenario for vehicles?
Well, LEDs, as I said, lighting is a long lead time item. It takes for a two-wheeler almost about 6 to 8 months, even a year sometimes. On two-wheeler or four-wheelers, it takes almost close to 2 to 3 years. So I think we are seeing that there is a healthy adoption of the LEDs. Our outlook of basically a 50-50 revenue remains intact in the LED visibles conventional. And since we are an OEM play, the lighting technology largely also depends on what basically as a vehicle architecture the OEMs want to give out. So I think that way there is, I think, no change in our outlook on the LED adoption.
Great. Can I ask one more question? So you mentioned about your organic LEDs in the plan for 2025 onwards. Can you give some more details on that particular product, please?
I think there are various types of LEDs. Again, Stanley is one of the partners, is one of the very unique players who also manufactures its own LEDs. So, irrespective of what kind of OLEDs or, the regular conventional LEDs or, any of the new technologies and projectors come in, we are pretty adept on actually having those old technologies coming in. The company keeps on consistently doing technology roadshows with basically our key customers to show that these are the technologies available. And as I said, that the OEMs, a lot of the lighting interventions, what they want to introduce to the market is also dependent on their customer technology roadmap. So I think that way, as and when the technology adoption happens, we have invested in the electronics plant. So that would actually cater to the back end on new LED technologies as well.
Thank you so much. It's really helpful. Thanks for taking my question.
Thank you. Participants, you may press star and 1 to ask a question now. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir. My question pertains to the PLI scheme. So, is there any play for lightings in that for you, or it doesn't get covered in the PLI?
No, so PLI scheme has been notified on 10th November. If you see, there were almost about 300 requests. So as far as we understand right now, that the lighting is not part of basically the PLI. Primarily, what I understand that the government sees as a highly localized product already, and they are basically looking at the advanced technologies. So as of now, we don't see PLI for lighting. However, obviously from the other schemes like MSEPs and other electronic, we are seeing that some incentive advantage will be coming into the company.
Got it. Great. Thanks and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Hasrunkara from Finvest Advisors. Please go ahead.
Yeah. Sir, I didn't get the breakup of 104 crore properly. If you don't mind, can you repeat it, sir?
Yeah, so Mr. Mehta will basically give you just more or less, this is for Q2, the 104 crores.
Yeah.
I think LATL is basically 26 crores. TVS is about 14.
Mm-hmm.
John Deere is 10. MG Motors is 3. Toyota is 5. Nissan is 5. And in that, others are 41, giving a total of 104.
Okay. Thank you.
Thank you. As this was the last question for today, I would now like to hand the conference over to Mr. Deepak Jain for closing comments.
Well, I would like to thank everyone for joining on the call. I would also like to say that we remain confident on the growing prospects of India and the automobile and the auto component industry. I hope we have been able to respond to your queries adequately. For any further information, kindly request you to get in touch with SG, our Investor Relation Advisors. Please stay safe and healthy. Thank you very much.
Thank you. On behalf of Lumax Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.